Hey everyone, it's Life and Taxes with Steve. Now let's meet Lisa. She's a physician making $400,000 a year, working tirelessly to provide for her family. Every year she files her taxes and feels defeated when she sees how much she owes. Steve, she told me, I work hard, I save, but I feel like I'm just spinning my wheels paying taxes. Does this sound familiar to you? High-income W-2 earners like Lisa often feel stuck, but the truth is there are powerful strategies to reduce your tax liability without cutting corners. Today I want to share the playbook to help high-income earners like Lisa and maybe you keep more of what you earn while staying compliant with tax laws. Why high-income W-2 earners feel stuck. You work hard, you earn well, and yet it feels like you're penalized for your success. And here's why. One, there's limited deduction. As W-2 earners, you can't deduct business expenses like a self-employed individual can. Tax reform has also capped deductions like state and local taxes. Two, there's a higher effective tax rate for W-2 earners. Many of you land in the highest tax brackets, meaning you lose more of each of your additional dollar to taxes. Three, the complexity of tax rules. Without expert guidance, navigating tax saving strategies can feel like finding a needle in a haystack. But here's the good news. There are ways to lower your burden significantly if you know where to look. Here are some smart tax strategies for high-income earners. Let's break it down into actionable steps. These strategies are legal, effective, and designed to work for people like you. First, maximize retirement contributions. One of the simplest and most effective way to reduce taxable income is to maximize contributions to your employee-sponsored retirement plan like 401k. For 2024, you can contribute up to $23,000 if you're under 50 and an additional $7,500 if you're 50 or older. If your employer offers a Roth, consider splitting the contributions to hedge your bets on future tax rates. Number two, leverage health savings account, HSAs. If you have a high deductible health plan, an HSA lets you save pre-tax dollars for medical expenses. You could triple tax advantage. Contributions are tax deductible, growth is tax-free, and withdrawals for qualified expenses are tax-free. Number three, you can use a backdoor Roth. Many high earners exceed the income limits for Roth IRA contributions, but you can still benefit from tax-free growth by contributing to a traditional IRA and then converting it to a Roth IRA, a process known as the backdoor Roth. Four, optimize stock options and equity compensation. If you receive stock options or RSUs as part of your compensation, timing your sales strategically can minimize capital gains taxes. And what's the strategy? Work with a tax advisor to explore 83B elections, holding periods, and tax-efficient diversification. You can give to charity. Don't just write checks to your favorite causes. Be strategic. You have donor advisor funds. Front-loaded charitable contributions to get a larger deduction in high-income years. Gifting appreciated assets. Donate stocks or other appreciated assets instead of cash to avoid capital gains taxes. What are some of the advanced strategies for big savings? For those ready to level up, here are more sophisticated approaches. You have tax advantage investments. Real estate, invest in syndications or REITs that offer depreciation benefits to offset taxable income. You have opportunity zones. Reinvest capital gains into qualified opportunities funds to defer taxes and potentially eliminate them on future growth. You have business ownership opportunities. Explore setting up a side hustle or LLC to unlock deductions unavailable to W-2 earners like home office expenses, travel, or even paying your kids for legitimate work. You have employer fringe benefits. Take full advantage of perks like dependent care FSA contribution, tuition reimbursement, or commuter benefits to reduce taxable income. You have cash balance plans. Some employers offer cash balance plans which allow for larger pre-tax contributions than 401ks. These are especially useful for high-income earners approaching retirement. Why you need a tax advisor. None of this works without a solid team in your corner. A tax advisor doesn't just file your taxes, they help you plan strategically. What are some of the benefits of a tax advisor? 1, customized tax strategies tailored to your specific income, goals, and risk tolerance. Proactive planning, advice for reducing taxes now and in the future, not just reacting at tax time. Staying compliant, avoid costly mistakes or audits while taking full advantage of legal tax strategy. You have to take action. So where do you start? Here are 3 steps you can take today to begin lowering your tax liability. 1, schedule a tax review. Meet with a tax advisor to review your financial situation and identify missed opportunities. 2, maximize benefits at work. Check with your HR portal for underutilized benefits like HSAs, FSAs, or deferred compensation plans. And 3, plan for the long term. Begin exploring strategies like Roth conversions, charitable giving, or real estate investments that can save you money over time. Let me tell you again how Lisa's story ended. After working with a tax advisor, she reduced her tax liability by $50,000 in 1 year. But more importantly, she felt empowered. She was no longer a victim of the tax code. She was in control of her financial future. And that's what I want for you. High earners like you have worked hard to achieve your success. You deserve to keep more of what you've earned and invest it into what matters most: your family, your dreams, and your legacy. So I challenge you, take a step today, partner with a tax advisor, explore these strategies, and start building a plan that works for you. Because paying taxes is inevitable, but overpaying is optional.